All right, the next concept we're going to be discussing in the identifying of potential action zones is the concept of order blocks. Now, on the left here, we have a bullish order block, which is also known as a demand zone. And on the right, we have a bearish order block, also known as a supply zone. Now, these order blocks are, like I've mentioned before, are these little footprints that's left in the market that's triggered by algos. When institutions needs to drive the price up or down, they put these algos on and they collect the orders before the market moves impulsively in a different direction. Like I said, and then these footprints or these blocks that get formed in the market could act as support or resistance, when the price returns there. Now, what's important to note with these order blocks, and this is really key, is the market would move, let's say for example, in a bullish direction, and then the market would suddenly have a reversal, in the opposite direction before it has this big impulse or thrust in the same direction. Now, the key is this sudden reversal in the market, so you'll always have this bearish candle or this bearish down move before the market makes this impulsive move. And the same on the bearish side, you're looking for that sudden change in direction, and then the market has this impulsive move. And then that bullish candle before this bearish move ends up being the footprint or the order block that we're going to be identifying as a potential action zone. Now, like I said, the market could maybe make this impulsive move and then maybe range a bit, and then you'll have a sudden move to the downside and then another move up. This is going to be the order block that we're going to be marking off. And the same in the other direction, market might come down, have a sudden move in the other direction before it does the impulse to the downside. Now, the market could also come down, have a little bit of a range, and then maybe have this spike down before the market goes up. Now, this again will be the bullish order block that we're going to mark, or the same for the other side. The market could go up, have a little bit of a range, have this candle in the one direction before it reverses, maybe makes an engulfing pattern here, but this is going to be the order block that we're going to be marking off. So yeah, this is very important. It should be the sudden reversal of direction before the market shoots again in the other direction. So let's quickly have a look in the charts at what that looks like. So here we got a chart of the Euro Yen weekly, and just on a side note, these order blocks do form on all time frames, and they're very important on all time frames. But I'm just quickly going to mark off a few of these impulsive moves on the chart. So we have this big impulsive move over here, another one over here. We have another move over here, and then the market turns around and has sort of an impulsive move on this side. And we're going to be looking at those areas. Before this market made this move up, as you guys can see, there was a weekly candle over here, and then it had a small weekly down candle before the market thrust up, quite significantly. Now, this little candle before that move started will be our bullish order block, and we're going to be marking order blocks in these green blocks. So if you extend these order blocks, you guys can see the market came down and actually found support over here before continuing to the upside. So yes, this is going to be a potential action zone that we're going to mark off, and we're going to be hunting longs when the market gets in these areas. Moving to the next one, we have this down candle here before the market thrusts up. What I want to point out here though is I don't consider this a high probability bullish order block or a bullish order block at all, because the point that we were looking at is we're looking for a sudden reversal in the market. That one candle, and this market came down, and this candle didn't reverse in this move. So to me, this isn't a bullish order block before the thrust happened. We're going to be looking at the next example. The market shot up over here, it stalled, and then we had this sudden candle down, and then the market thrust up. Now, this is a good example of a bullish order block, and as you guys can see, the market came down to this area, touched it, and had a few months of a bullish move after that. Now, the next down move we marked off here, as you guys can see, the market moved up, it stalled over here, it had this sudden move up and then the reversal, forming this engulfing candle. We did discuss the engulfing candle in the IFX Academy, and this was why this is important. If you have an area like this, we're going to mark this off as a bearish order block. Now, this is a weekly chart, and I don't know when the market's going to return to this area, but you can mark this off, if it might be in a few months, it might be in a few years. But we definitely, if the market ever gets to this area, we're going to be looking for, we've marked this off as a potential action zone. And if we're looking for shorts, we're going to be looking for shorts over there. The market also did print these two highs over here, so there's going to be liquidity up here. So in the future, this is definitely going to be an area that we're going to be watching for potential shorts. But like I said, this is a long time away, but maybe take note of that, and in the future we'll make a move in here and we'll start hunting shorts. So I hope this is clear which of these areas we can consider as order blocks, why this is not considered an order block, even though some people might mark this off as one. And these areas, when the market stalls as a sudden reversal and then shoots up, these are the areas that we're interested in. Okay, let's have a look at a few more examples. All right, USD JPY. This is again a chart that we've discussed previously in these training modules. This was that 3 drive down before we had the big reversal. And we're going to be identifying, the significant order block in this move. As you guys can see here, this was the low that was printed after that 3 drive. And then we had a move up and another move up. But before this last move up came, we had this sudden reversal in the market. These are planned moves, algo-driven moves. Market shoots down, collects those orders, and then shoots up. If you mark that area off, as you guys can see, the market came down into that area quite perfectly before finding the support and moving higher. So yeah, a great example, and this was an excellent textbook trade, and we might be looking more at this one in future modules. But yeah, a pretty clear order block here. As you guys can see, it stands out. Like I say, the sudden reversal, and then the big thrust up marked off as the bullish order block. All right, here we got a chart of the New Zealand dollar CAD daily, and this is also a chart that we've been discussing at length in this training module. And just looking at this move up and identifying a few order blocks on the move up. As you guys can see, we had this impulsive move, a small move down where it suddenly reverses, and then another move up. The market came down, found support in that area, and then we shot up again, a little move down before the market shot up again. So this is another area that we can mark off in future models where in the future where the market might find a bit of resistance. And if somehow you do have a bullish bias, then you can start looking for longs over here. Moving a bit forward, as you guys can see, we had another a move up here. The market stalled, had a bearish candle, and then shot up again. And this was where the market actually found a bit of resistance at the start of this training module, and then shot up again. And the market came down into that area again. And this was when we were discussing the head and shoulders pattern. But yeah, we started identifying this head and shoulders pattern. And we did mention, or I did mention that I didn't think that this market is ready to break out because we haven't had the corrective pattern on this side. If you were expecting a correction on this side and you were looking for bearish moves with a bearish bias, then you would need to identify, bearish order blocks on the other side. And looking at the chart here, we had the move down, and then we had this big consolidation before these 2 bullish candles, and then the market, thrusted down or made this impulsive move down. So this area, this block over here, can be marked as a potential action zone or bearish order block. So yeah, just marking off these blocks over here as a potential action zone. As you guys can see, the market came back, made a bit of an ABC, and to be honest, it actually just touched this area to the pip. And if if you were quite awake, you could have also seen this last spike up was a little bit of liquidity. So you would have expected the market to at least clear this little high, and then perfectly came into this area. And as you guys know, a bunch of us actually took the short already on this market. And even if the market turns around now, we had a good enough move, so we know we won't be losing any money. But yeah, if you were looking for bearish moves, then you would have definitely marked this area off, this bearish order block. And if you noted the liquidity over here, that would have just been for some extra confidence in the short trade. And yeah, I've marked off that little bit of liquidity. Like I say, if you've spotted that, then well done. Your eye is definitely getting trained to spot these little areas in the market. Just same chart, just moving to a 4-hour time frame. As you guys can see, this is where the market went into this bearish order block and took this liquidity. And this bearish order block actually ended up breaking this order block over here. Now, it's very important to note that obviously not every order block is going to work, and you need to use them in conjunction with your bias. We've obviously got a bearish bias over here, so we're actually expecting the bullish order blocks to start being broken, and this market actually did break this bullish order block, which is a good sign for this area over here. So let's hope this one continues. I'm not sure how it's going to play out. Maybe we got a little bit of an ABC here. The market came down, had a move up here and came down. So we have another lower time frame bearish order block over here. And this is a potential move that could happen. Like I say, you can never precisely predict which way the market's going to go. But what we're doing here is we're trying to build a strategy and find high probability moves or areas in the market that we can look to trade in. So yeah, this is actually something that I'm going to be looking at next week, and hopefully the market finds resistance over here and then continues to the downside. Okay, we're looking at a New Zealand dollar, US dollar 4-hour chart, and we're going to go step by step through identifying these order blocks. At the start of this move, the market had this this up move and then turned around. Like I say, we can't mark this off as an order block because it wasn't a sudden turn, reversal candle in the opposite direction. But the market came down, and then it had these two reversal candles or opposite candles, and then the market had made this big move down, engulfing those candles. So this area is an area we can mark off as a bearish order block. So yeah, I'm just going to mark these off with lines, and as you guys can see, we mark off the low where this move up started before the market came down impulsively. So moving forward, as you guys can see, the market did find some resistance over there, came down, and before it made this last move down, it had one more up move, and then the market came down. So again, this bullish move can be identified as the bearish order block. Market comes up, comes crashing down, makes another move, finds resistance at that order block again, and then came down with two candles, had the reversal, and then came crashing down again. So now this is our new bearish order block that we can mark off. Market comes down, has a reversal, stalls a bit as this clear up move before the down move starts, and again you can mark this off as your bearish order block. Now the market actually had this big what I call capitulations, and this might be signs that the market could have run out of steam. But anyway, the market shoots up and does find some resistance or trades up into this bearish order block. And then the market comes down into what's now this bullish order block. And like I said, the market made this move up, stalled for a bit, and then had this down move before the market thrusted up. So this is a clear manipulation of the market, driving the prices down before the market shoots up, actually to clear these lows over here. Now, you guys might have noticed that I didn't mark the top of this block over here. I marked the top of where the move started. Now this is very important. Now, a lot of people will say you have to mark the last candle. It's not the last candle because depending on which time frame you are, the candles will differ. It is where that move started. So this is very important, and I'll show you some more examples of how to mark that. But so the top of this area is where this bullish order block will begin, because that's where the move started, the manipulation started, the algos got triggered or activated, and then the market moves to the upside. So moving forward, after the market found some support over here, it actually shoots up into the next level of resistance, or then the next bearish order block that we marked, and finds some resistance over there. Now moving down, the market actually came down again into this order block. I don't know if it cleared it by a pip or two, but it found support there again, and then the market shot up. So the market keeps on going up, and you can actually even mark this off as a bullish order block, because the market stalled, had this little run down before it moved up. The market had the move down, shot up, had this little consolidation, and then the reversal before the market shot up again. So again, you can mark this off as a bullish order block or a potential action zone where you'll be looking for longs. So moving forward, as you guys can see, this level didn't hold, and the market actually went straight through this area. And this again, you're using these order blocks in connection with a bias. So if you had a bearish bias, you wouldn't have traded at that level. But what's really important to note here, then, when these order blocks fail, and this is something the supply and demand traders do quite a lot, is you must look at where the move started that actually broke this level. And this, if this was the last bullish order block and you had a bullish bias and the market ended up breaking this level, it's very important to note the area where it started. And this was the area where it started. The market came down, had the reversal before it thrusted down. So this was the area that the algos got triggered, where the market got manipulated and the sellers started stepping. And so now you definitely mark this area off as a bearish order block. Now at the currently at the making of this, this video, the market hasn't returned to this area yet, but this is definitely an area that you will mark off in the future. And if you have a bearish bias when the price gets here, you might be looking at this area as a potential action zone to look for shorts. Just looking at a last few quick examples, something to also note is these little order blocks that you sometimes miss in the market. They can be excellent areas of support and resistance, and excellent areas to enter trades. If you have your bias correct, and you can actually get quite accurate entries, quite pinpoint entries. And this was a trade on the New Zealand US dollar that we actually took. It's actually also one shared by Mr. Peter Danaka that I shared quite a lot. And this area right here, I think it was 0.682. As you guys can see, the market went up for 2 days, stalled for 1 day, and then it thrusted up again. Then the market had this big range for months and months, and then the market actually came down, created this area of liquidity, had a bit of a news event, spiked down into this order block, and after that it was just one-way traffic, and it actually ended up clearing these highs over here. So yeah, make a note of these little areas and start looking for them in the market. There was another example over here. Market shot up, one day of reversal, shot up again, and the top of that order block actually ended up being quite good resistance, and the market took off from here. And just looking at Aussie dollar, US dollar, and I'll show you guys that don't treat these order blocks like they will always work. They must be in confluence with other levels or in the same direction as your bias. But just marking some order blocks on this chart. As you guys can see, the market shot up here at 1 day where it stalled and then shot up again. As in the previous example, it makes these little order blocks, and then when the market returns to this area, it finds resistance and then shoots up. Market then turns around, shoots down, stalls for a candle, and then shoots down again. Now this was an area that you could have marked, but the market actually never found resistance there, and it actually just cleared these levels and ended up going for these highs. Again, another example over here where the market sort of stalled, reversed, and shot down, but the market never really stopped there, and like I say, for some reason it needed to collect more liquidity over here, and then the down move started. This little area over here actually ended up being some good support. Market shot up, stalled for a bit, and then shot up quite violently. Now this order block, as I mentioned in a few slides before, this was the order block that created this big move up that took out both these order blocks and this high. So this would be a very strong level. So this level actually ended up holding. The market came down, after taking big liquidity over here, you would actually probably be bearish. But the market did find some resistance here, and there was a few weeks of bullish movement here for possible trades before the market continued down. So make a note of these order blocks that are powerful enough to break the order blocks on the other side and perhaps take liquidity. They're quite strong levels of support and resistance. And we haven't discussed Fibonacci levels yet. We're going to be discussing them in future. But just to show an example of what I mean using order blocks in Confluence with other concepts, we had this big impulsive move here. We had the reversal candle and then the continuation. If you marked off this little area over here, as the market came down, this level was actually in confluence with the 161 extension of this move up. So this will definitely be an area that you would have watched for potential longs. And like I said, I'm covering fib extensions and fib levels and Confluence in a little while. But just to show you guys what I mean by using these in Confluence with other levels. And just looking at the same chart again over here, we had the big shoot up, little bit of a reversal candle before the market moves up again. As you guys can see there, if you had to draw an order block over there, the market again found some resistance there before shooting up. So yeah, I hope this concept is clear enough, and we will be showing you guys more examples as we go along in our trading room. Like I said, go to the order blocks concept channel, and if you guys are taking trades based on order blocks, add the hashtag order blocks to your chart so we can build up a knowledge base.